Okay, so Zoom people, can you hear me? Hmm? Okay, all right. So we will start today's lecture. Please focus. Lecture, I think, will be in English as we were conducting. You all understand English? Okay. So we will continue. What was pending in advanced capital budgeting? Anyone remembers? Nothing. I also don't know what was pending. So, what I am going to do now is listen, I am supposed to, anyways, um, teach theory chapters of AFM to you. Now, do you remember, do you know in FM there is that theory part also, which generally we all struggle with because we keep it for the last minute. We read on our own, we try to remember certain things, and we hope that no theory question comes, and we hope that it goes into option. In inter CA, you have all experienced it. In final CA, I personally took it on myself that theory chapters also we will cover in the class only. You're understanding, no? And there are total 5 theory chapters, okay, of which theory questions do come. So today I will do a mixture of advanced capital budgeting and one theory chapter. I do not want to teach all theory chapters in one shot because I will feel bored. Forget about you. Both of you understand now. 5 chapters theory non-stop will come to FM now. It will appear not like FM. So we will mix it. So today at the start, I will start one chapter called as Financial Policy and Corporate Strategy, which I think I will finish in 1 hour. Small chapters there will finish in 1 hour, and then remaining 1.5 2 hours, whatever is there, we will continue with advanced capital budgeting. But as far as this theory chapter is concerned, you are anyways not supposed to write anything. You are just supposed to listen and read. So the notebook will not understand that our chapter is done. You're understanding, no? There, the notebook we will continue with advanced capital budgeting only where we had left last. I hope you understood what I'm saying. So just little explanation we will do. We'll finish one chapter one by one like that. 5 chapters are there. Once all 5 are done, you'll also feel little comfortable. Your first lecture? हाँ, but तुझे कभी देखा नहीं मैंने. नहीं, तेरा नाम क्या है? नहीं सर, you used to come online क्या? ऑफलाइन आता था? अच्छा, ठीक है. All right. So now, अभी just 1 minute. Huh? Anyone there from South India batch? I think some miscommunication is there. Chalo, so what I will do now is, do you people have ICAI modules with you? What? No, you can download them. Chalo, so I will send it to you. I'll show it here also. Everyone there, and किसको भेजो यहाँ पे? So AFM study module, financial policy, corporate strategy. ग्रुप पे डाल देगा, डाल दे. Hey, you want me to do this now, or should I skip all this? Theory chapters, skip. Now, I personally feel if I skip, you will also skip. That is one big point. That you understand now what I'm saying? You will never do it. And then last minute you will start struggling for YouTube videos and Telegram links and important questions and this and that. Don't do that. Now we'll finish it here only. Okay? All right. हाँ, I now remember you. Haircut change किया क्या कुछ? अभी याद आया मेरे को तो कौन है. ठीक है. चलो. Ready? All right. So please check your WhatsApp groups. Have you received that PDF? Both November 26, May 26 has got it. Okay. So those who have joined in late, what are we doing? I am just mixing the AFM theory chapters with the AFM practical chapters so that we don't feel bored in doing theory. At the same time, we finish the theory chapters also. The first chapter that I'm picking up is financial policy and corporate strategy. I will now ask you to very carefully study, read what you would have anyways done at home, na? You would have not skipped this. You would have anyway studied it if you wanted marks. Then do you realize what you would have done? You do it now only so that later on now there is no pressure on your head that ye baki hai, this is pending. No, we'll finish it off. So I want you to now read. You can see in this module there is point number 1. Okay? Till point 2 starts, please read. Everyone, please. Ready? So this chapter talks a lot but has very little concept as such. A lot of words are there. You understand, some people they speak a lot but they speak nothing. You understand, lot of speaking is happening but there is content is very less. So nothing great. So yeah. So point number 1, I have written down notes in my language. See, what are they saying? What is the advanced role of a chief financial officer in various matters including value creation? So Traditionally main role was of this is they are basically ICAI is telling a chartered accountant that when you become a CFO, traditionally your role was what? Wealth maximization. Do you remember in Inter CA I used to teach you this? Goal of financial management is maximization of shareholders' wealth. Something you remember? Governance, compliance, and control. Now, I think by doing articleship, you now know what is compliances and all. All these things used to be our role. Now, additionally, chartered accountant support is required in strategic and operational decision making. So basically, now they are asking CAs to be involved in operations also. Is what strategy and operations and all that is also a part of our profile. So, what are the additional roles that we should do as a CA? Risk management. Now, can I say half of AFM is built on risk management concept only? What is supply chain? Any idea? Supply chain. Supply chain management. What does this mean? Sourcing of raw material. Apple wants to build iPhone. Now that all the components of iPhone are not built in America, and all components are not built in China also. All components are not building in India also. There are various countries develop various small parts. Now that whole thing to be supplied and then created into finished product is basically supply chain. That in that management also our role is required. Actually, no, earlier in when costing used to be a part of our syllabus, official syllabus, and that too before 2018, that is 2017 and before. 70% was costing and 30% was operational research. There was a subject called as OR. In OR, no, transportation and assignment and all those kinds of concepts used to be taught. Okay, supply chain, but it is now not a part of the syllabus. Anyways, point number C, I think you understand. This is also our job. Anyone knows what is this ESG financing? हाँ, क्या क्या क्या? So what is ESG financing basically? So every company now is supposed to take care from its own side environmental issues, social issues means people, public, community, stakeholders, and governance means basically following all the rules and regulations, taxes, compliances, etc. So sometimes to contribute to this as a company, the company could issue new bonds. Everyone clear? New new securities to raise money so that it can do better here. For example, right now I might be having some plant which is operating on, let's say, petrol or oil or something like that, but I want to convert to solar, for example. Now, for that, I would require more money. That financing means raising money to do good to environment, society, and governance is also a job profile of CA, is what they are saying. Everyone clear? You're sure? Understand? Some of these bonds are called as green bonds. Green bonds means basically you are the company who is issuing a green bond is telling the people that we are raising money from you to go green. Everyone clear, na? To become more environment friendly. Okay. So students, this was everything that you read in point number 1. I'll share this PDF with you. Don't worry. Everyone clear with this till here? Chalo. Next, students, let us now read entire point number 2. Just 1 minute. Do not read 2.1. Okay, don't read 2.1. Read till here. Everyone, please start. Since you know I'm anyways going to explain, na, read at a little faster pace. You understand? Let me know once done. Huh? Done? I'll start. Okay. You see this speak a lot. Essence is very less. You can read very fast. It's okay. So let's start. Point number two. Strategic financial decision making framework. Okay. So here can I say they are starting to mix strategy and financial management. Both are getting mixed now. That is why this subject used to be called as strategic financial management. Okay. All right, but now it is of course advanced financial management. Okay, so first line, investors want to maximize returns at minimum risk. This is an obvious line. Everyone clear? They want to returns, they want to maximize, risk they want to minimize. What is the objective of corporate financial management? It is to implement proper investment and financing decisions. Investment and financing. This is capital budgeting. This is capital structure. Remember inter-CA? To satisfy shareholders. Even in that chapters, we used to tell you that the goal of financial management is to satisfy equity shareholders, maximize their wealth. Everyone remembers? Now, satisfaction of interests of shareholders, ICAI says, is the means. Maximization of their wealth, ICAI says, is the end to that means. Listen to these notes and all very carefully. Theory questions come out of all this. I will at the end of it, no, at the end, I have also kept this, okay, of what all past exam questions have been asked. So you can see like how many marks. This is 4 marks question. Then there is another 4 marks question. 4 marks. Okay, 4. So 4 mark questions keep coming in this. And by the way, there is another 4 marks, 4 marks, 4, 4, 4, 4, 4, 4. One more thing I wanted to share with you. This is 8 marks and 4. This is RTP, no problem. 8. There is one practical problem also that comes from this chapter. So can you please take it seriously, everyone? And by the way, what I am showing you, this 4 marks, is all the questions I showed you now. I have taken my last 5 years, huh? Because this chapter got introduced in 2018. That was when the new syllabus came, which became old for you in 5 years. So you can see many questions have been asked. So let us not feel bored about it. Let's do it now. Sometimes no, some weird question might come practical. FM, anything can come. This can be hedging. You're understanding? Okay. So I'll give you this whole PDF. Don't worry. So just be with me here. All right. Now, next point. Capital is the limiting factor. What do you mean by this? Limiting factor means it is not unlimited. Everyone clear? We have limited resources. Therefore, management should strategically allocate funds to investments that sustain or increase investor returns. Now, you understand from here onwards, one thing only they are saying, that investors want to minimize risk, maximize returns, capital is limited, so you have to use strategic decisions to increase returns, minimize risk. So fundamental essentials of a business: strategy plus finance plus management will give rise to proper business. So they are teaching you a little bit business. What three pillars are there? Strategy, finance, and management. When it comes to strategy, ICAI says strategy should be as clear and realistic as possible. Finance means it should be good management of resources, controls, and system. Management means teams and process, people basically. Okay. Now, so they have given one big paragraph about strategy. I have broken it up into 3 parts. Listen carefully. Strategy is defined as, now if you ask me, no, this is the what part, this is the how part, and this is the why part. Okay. See, what is strategy? it is defined as long-term direction of an organization to achieve competitive advantage over other competitors. That is called a strategy. How do you achieve? Through configuration of available resources within this changing environment. Changing environment means basically now AI is coming. So a strategy of a mobile phone company could be to incorporate AI in a way that it becomes better in competition than the others. That is strategy basic. But why you're doing this? For the fulfillment of stakeholders' expectations. Everyone clear? So that your shareholders, etc., wealth is increased. Understood? So this is what you all read. So when you're sitting to revise now, what you should do is either you can read ICEA module and then this, but now that ICEA module I'm making you read in the class only, no? Then while revision, I think you should just take up these notes. You don't need, and don't just take printout of this, but don't forget. Printout you should take, you should have hard copy. Otherwise, PDF and all, na, it will go away somewhere. Okay. All right. So students, let's now read 2.1. One paragraph only, quickly. 2.1. Ready? So they're talking of what is the meaning of strategic financial. One of the questions could be this only. What is the meaning of strategic financial management? 4 marks. So just write this down. Application of FM techniques learnt in inter and final to strategic decisions in order to help the decision makers objectives. Of course, some objectives are there to meet that. How can you contribute by taking financial decisions? That is the meaning. It combines accounting with FM. Very nicely they have used two words. It is saying FM na is more futuristic and expected and all that, and accounts, can I say, is more precise and scientific because it deals with past. So strategic financial management is saying you have to combine both the natures. You have to not only know how to use report focused backward looking discipline of accounting with more dynamic forward looking subject of FM. It is the identification of strategies to maximize market value. Again, similar kind of lines. Maximization, identification of strategies to maximize market value. When market value will maximize, only then shareholders wealth will maximize. Allocation of limited resources among competing opportunities. This is capital budgeting. Two projects are given, select any one. Whichever project will have higher NPV, we will go for it. And then once you allocate the money, then implementation and monitoring of chosen strategies. Everyone clear? Now this is it is like someone just speaking to you normal things that, oh, you know what, we have some strategic goals, but we need financial management tools to achieve those goals. So the whole process of applying the financial management tools to fulfill strategic objectives is called as strategic financial management. And what it is all about, it is all about maximizing shareholders wealth. How will shareholders wealth maximize? By maximizing market value. But how do you do it? We do it by allocating limited capital to proper opportunity so that wealth is maximized. Same thing. You're understanding? Okay. Okay. Now comes 2.2. Read everything. 2.2 till this 3. Theory. Theory. I am not a theory teacher, but I am trying. I'm just trying my best that you get. If it comes for 4 marks, you should get those 4 marks. Why to lose that also? No? Acha, listen 1 minute. Look at me. You know na, uh, this chapter can be made much more big and large by giving lot of examples and this and that, but I don't want to waste time in that, because my goal is not, it is not a theory subject. I hope you're understanding. It is just little side items which you need to just know. Take it, go ahead, take the notes, buy at those. I have given you the past exam compilation. Now just go through. Acha, ye questions come and go ahead. We will not like how I do, like how a theory teacher would explain a theory subject, because the whole subject is theory. That is not my. I hope you're in sync with me. You have to just brush through it and go ahead. That is what you also would have anyways done if theory you would have studied in practical subjects. Okay, chalo, start reading. 2.2. Another half an hour, this chapter will get over. Huh? We are going at good pace. Then we'll start sums. हाँ हाँ देने के लिए बनाए थे. क्या सीक्रेट रखो उसको. Everyone done? Okay. You want time? All done. Okay. So what they are saying, 2.2. Now see how I have made the notes. Functions of strategic financial management. Okay. Now the ICAI has broken it up into three parts. Topmost is strategy. Then there are tactics, and then there are operations. Strategy, can I say, is long-term course of action. Tactics are intermediate plans. Operations are short-term functions. Everyone clear till here? This can be very well explained through war, of what are strategies of war, tactics and operations. But at this moment in history, I don't want to speak about it, because otherwise it will appear very insensitive, because right now a lot of things are going on. But you understood na strategy. Achha, you can give me example. What could be corporate strategy? Think. Okay, let's think that um, you are Oberoi Realty Builders. Okay, what could be strategy for you? Give example of any strategy. There could be multiple strategies. Okay, to become number one builder in Mumbai. Okay, to have, or the strategy could be to to adopt in changing environment, or a strategy could be to redevelop some area of Mumbai into a better place, whatever. This is strategy. What could be tactics? Intermediate plans. Huh. Where to acquire land, legal, which land owners are willing to sell land to us, what legal ramifications can come, procurement of raw material for that, procurement of labor for that, all that, can I say, will come in tactics. Tactics can also be like this. You can set up a department which handles finance. You can set up a department that handles HR. You can set up a department that handles the construction. You can set up a department that handles legalities. Now all these are department heads. They are all tactical heads. No? You're understanding? Strategy is developed by the boss. Then all these subheads, no, they are tactics. And operations means, I think, then start working on it. That becomes operations. So Do you understand that long-term course of action, tactics are intermediate plans, and operations are short-term? Operations could mean, okay, you have to go to Jaipur and bring this pink stone to Mumbai. Somebody goes to Jaipur, puts it in a truck, brings it there. Operations. Everyone clear? Now, then ICEI is saying that strategy is handled by whom? Senior management. Tactics are handled by middle level management. Operations are handled by, they have used the word line management, basically the lowest rung of management. Everyone clear? Okay. Investment and financial decision. Again, capital budgeting and capital structure involve the following functions. Now students, there are five functions that they have given. It's very straightforward. Continuous search for best investment opportunity, selection of the best opportunity. Okay, A and B, do you realize is investment? One is to search continuously, second is to select the best. Then third is what? Once you have selected the best, how will you raise finance for funding it? I hope everybody is understanding. Capital structure, determination of optimum mix. What is optimum mix means? What? Debt equity mix. Everyone clear? Point number D, establishment. Once you have raised money, put the money, then you're establishing systems for internal controls, means whatever you have planned, is it actually taking place? Are there systems in place? That is internal control. And point number B, E is like ratio analysis. Like, okay, once it is done, you sit and analyze whether everything was right or not for further investment, for further decision making. Tell me five things. Anyone remembers? First is continuously search. Second, select the best one. Third, debt equity mix for financing it. Fourth, once you have put money, then establish controls, internal controls, systems for internal controls. And fifth, once the thing is done, then analyze for future. Everyone clear? Okay, these are what? These are functions of investment and financial decisions. Okay, next. Now this is a very general thing. They're saying the key decisions falling within the scope of financial strategy are financing decision. What does this mean? From where to raise money. Investing decision, where to invest money. Dividend decision, out of the profit that is accumulated, how much to pay and how much to retain. These three was our inter-CA, if you remember. And then portfolio decisions, you know that whatever money you're getting, there is three. The mix is to be decided not only in financing, but it has to also be decided in investing. The mix to be decided in financing is financing decision. Mix to be decided in investing becomes investing as well as portfolio decision. Everyone clear? Okay, we are done with the second part. Chalo, let's go to third. So students, in third, please read 3.1. 3 and 3.1, please. Actually, no, if you notice carefully, this is strategic management subject put in one chapter. You're understanding there is a lot of SM na, that you can study, you can understand. Suitability, feasibility, acceptability, strategy. So ready? So what they are saying, point number 3, what are the different strategies at different hierarchy levels? So first is corporate level strategy. This is the lowest level or the highest level? Highest level. So what they are saying, according to ICAI, the strategy at the highest level should be selection of business. Everyone clear? Selection of business means Mukesh Ambani deciding that I want to enter into telecom. That is a selection of business. Mukesh Ambani, Adani thinking I want to go into media and buy NDTV. That was a corporate level strategy. Everyone clear? In which a company should compete in and development and coordination of the same. So basically, corporate level strategy is all about selection of business and then work towards it. That's it. Everyone clear? Select the correct business. But then ICAI says, what 3 questions one should ask at the corporate level to select the correct business? 3 questions. Suitability, feasibility, acceptability. What is suitability? Suitability means, is it suitable for accomplishing the common objective of the company? Like for example, uh, Reliance wants to grow at a rate of, let's say, 20% per annum, and it is thinking of investing in the education sector, which grows at, let's say, 5% per annum. Now, do you realize education sector might be good, but it is not suitable for its common objective? Everyone clear? So suitability is one. Feasibility. Let's say an education company wants to enter into telecom business. Education wants to enter in telecom. Is it suitable? Yes. What a growth you will get. But is it feasible for you? For an education company, is it feasible to set up towers across the country, set up the 4G, 3G, 5G, whatever networks? Can I, so much crores and crores of rupees investment is required? Can I say not feasible? And last, is it acceptable? Now, students, acceptable now, there are 2 points, financial and non-financial. Now, for example, a very reputed company like, let's say, Tata Motors, for example, is thinking of entering into liquor business. Tata Motors subsidiary is Tata whatever. Huh? Now, it might be suitable, it might grow at a good rate. Hmm? Feasibility, they have a lot of money they have. But can I say here there will be a big problem and therefore they will reject it? I hope everyone is understanding. And the shareholders' satisfaction, financial might be there, but non-financial satisfaction is not there because liquor doesn't go well with the brand. Everyone clear, no? नहीं समझ रहा है? So these are the three questions: SFA, suitability, feasibility, and acceptability. For what? For choosing a business at the corporate strategy level. Everyone clear? Okay. Let's go to the second level now, business unit level. So students, I think 3.2 and 3.3 read it together only. Finish it off. 3.2 and 3.3. Done? So business unit level strategy. Business unit level strategy is basically the strategy for business managers who are not at the top level. You're understanding the business, they are at the top but not extreme top. Everyone clear? So what will be their strategy? Practical coordination of different units, developing and sustaining competitive advantage for the products and services that are produced. Now please understand, at corporate level strategy, a strategy must have been taken by Reliance that we should enter into film production. Everyone clear? Reliance, what is it? Entertainment. So now the person who is in charge of Reliance Entertainment is 3.2. I hope everybody is understanding. Clear? Okay. Then comes functional level strategy, which is the lowest. Now, students, do you realize in Reliance Entertainment now, there will be various small teams. R&D, operations, manufacturing means basically production of the movies, marketing, finance, HR. Everyone clear? Coordination amongst all of them. That all, can I say, will be the functional level strategy. Now, this is a very important, you should write in the notebook, I write in the exam whenever asked. One of the most important, according to me, functions of functional level strategy will be providing input to business unit level and corporate level strategy such as customer feedback or on resources needed things. One is what are the customers telling? Can I say topmost management will come to know only from the lower? And secondly, if they think that we need more resources, that also they will only tell us. So basically, the feedback mechanism is the most important point for the lowest management. And then all this is time pass, translating higher level strategies into action plans. Now, important. Among all, financial planning, all the departments are there. HR is there, production is there, marketing is there, everyone is there. But finance department assumes highest importance because we are studying AFM subject. Everyone clear, no? Mobilization and effective utilization of money. All other resources like HR, production, this, that, etc. can be easily mobilized if the company has adequate monetary base. Are you all able to understand? They are saying if money is there, then every other item falls into place properly. If money is not there, how much ever great other systems are there, you should write all this in when you're writing. If the question comes on functional level strategy, they would financial management. Now we are marketing our own department. Everyone clear till here? Okay. All right. Next, point number 4. Please read. Point number 4. We are doing something that you should have done, or you not should, you would have done later on anyways. We'll do it now in the class only. Ready? So what are they saying? What is financial planning? This is the 4th point. Financial planning. It is the backbone of business and corporate planning. So I have broken it up into like this. Financial planning is the systematic approach whereby मीत इंटरेस्टेड है कि नहीं है? क्योंकि ना मेरे को बहुत डिस्टर्ब हो रहा है तेरे बिहेवियर की वजह से. क्या करूं? या तो सो जा, या तो घर जा, या तो इंटरेस्टेड रहे. सामने बैठ के ना डिसइंटरेस्ट दिखाएगा ना, मेरा दिमाग खराब होएगा. मत करना ऐसा. हाँ, ओके. Ready everyone? Systematic approach. Okay, what is this? This is financial planning. Financial planning is the systematic approach whereby financial planner helps the customer, but please understand here the customer means the company for whom you are doing financial planning, maximizes existing resources by utilizing financial tools to achieve financial goals. Read it once more. Financial planner maximizes resources using tools to achieve goals, which is why they gave that equation. Financial planning is, see if this question comes now and you write all this equation and all, full marks you will get. Your understanding? In theory they can give 4 out of 4 fully. I have seen past exam papers. So financial planning is financial resources plus tools to maximize those resources. Why? To achieve financial goals. Now, financial goals or financial objectives are to be decided at the very outset so that rest of the decisions can be taken accordingly. What does this mean? This means that, for example, I want to grow my sales at 20% per annum is a financial goal. So that has to be told at the start only, no? Only then accordingly the marketing, the this and that will all start working in that. Objectives need to be consistent with the corporate mission and corporate objectives. Now, of course, which means if I tell that my financial goal is to grow at 2% per annum, but that is your financial goal. It is not in sync with the corporate level strategy where they might want to grow at 15-20%. Everything has to be in sync is what they are saying. You know one thing, I don't know whether you people study this or not. I have studied a lot of wars and lot of unfortunate incidents that have happened even within our own country. Even terrorist activities which have happened internationally. I've studied a lot. And there has been a uh, lot of cases where, see, army is there, navy is there, air force is there, government is there, central government is there, state government is there, police is there, then there are border security forces, and then there are CRPF, correct? Now all of these now are having their own intelligence departments. Intelligence, you understand? Secret service, intelligence, they give you inputs, what is happening, who is there, what. And many terrorist attacks have become successful because internal communication was not there. One party knew something, the other party was not told about it. If the other party would have been told about it, they had some input, they could have added on to this and something else would have come out. After, even when you don't know about when American, one of the biggest terrorist activity that took place was 9/11. I don't know whether you know about it or not. Twin Towers planes crashed. So in America there is one CIA and there is one FBI. CIA is more of international, FBI is more of local police. Both had such intelligence that if they would have collaborated, no, they could have averted that 9/11. Even 26/11. Mumbai. You know about it? You all were, I think, just born. I think 2-3 years old you must be. 26/11, 2008. So when you study all this now, you realize that there is a lot of miscommunication in teams. Now I don't know whether you know about it or not. Now government, they are also now the government which has come, they have created one common intelligence wing. I think NIA or National Intelligence, something like that they have created. So now what happens is because of that there is collaboration amongst all intelligence groups so that wrongdoings can be averted. Similarly for a company also, can I say finance is operating separately, marketing is operating separately, don't have any connection in each other. Do you realize that is what they're telling you? They are telling you that you first decide your objective at the outset, but they should be consistent with the overall mission. Everyone clear? Financial decision making helps in analyzing the financial problems that are being faced by the company and accordingly deciding the course of action to be taken. Now can I say ratio analysis, for example? Ratio analysis can tell a company that Baba, your debt equity ratio is very high, interest coverage ratio is very low. Kamal, please. क्या कर रहा है? Ready? चालू करें? What was I saying? Debt equity ratio is high. Why do we study ratio analysis? Ratio analysis was studied not only for shareholders to understand the company, it was also for a company to understand itself. That is what this point is telling, so that you can accordingly take course correction. They have told this ratios and cash flow statement are evaluations of performance. Everyone clear? Chalo. Now comes fifth point. Fifth point, now if you see the down past exam questions, this point, fifth point, what is the write a note on interface of financial policy and strategic management. It's a huge note. Okay, take your time, go through it fast. In Hindi we say no, upar se padho ek bar, and then I will explain it. Don't worry, just go through it. See, listen, please understand, directly reading these notes now is not right. This this is ICAI only, but I have kept it in little user friendly format. But first you have to go through that, and once you go through it, now you never need to go through it till exams. You understand? Now directly, now every time you read this chapter, read this only, because you have seen what ICAI has. If I directly show you this, now you'll always be under doubt what ICAI has, what ICAI has. You go through ICAI first, then I'll teach you this. Start. Point number 5. This is the 5th point. Now after that, 1/6 point is there, and chapter over. Huh? That's it. One chapter done. Theory chapter. One problem with this chapter is specific points are not there. Lot of generic word salad, they call it. They are repeating the same thing only. They are openly telling this is strategic management. SM. FM and so they are saying what is the mixture of FM and SM? That is the whole point. Financial policy and strategic management. Right? We start. Interface can be understood if we appreciate what a line. Starting point and end point of everything is money. इस सब लाइन लिख के आने का ना एग्जाम में. Starting light is in the exam and come. Starting point and end point of an organization is money. No organization can run an existing business and promote a new expansion project without a suitable internally mobilized financial base. Basically, without money, nothing. Correct? So now to manage money, what decisions you have to take? Capital structure decision is one. Investment decision is another. Dividend decision is another. That's it. Now there are 3 only. Everyone there? And then there are some other aspects, we'll talk about it later, but basically main 3 are these 3 only. And if you realize this is inter CA, first chapter of First chapter of final CA FM is a summary of inter CA entire FM. You have seen all this now in life. So capital structure decision means what? To support the expansion activity is very vital. What is vital? The decision of raising money, how to raise, from where to raise, etc. What is the only decision? It is all about debt versus equity. Everybody clear? It is all about debt versus equity. Now in debt, they are talking of debentures. In equity, they are talking of ESC or PSC in the long term. If you are looking for short term, in that, can I say public deposits is one example that they are given, but public deposits is not equity, it is borrowing. For short term, lot of examples are there: overdraft, cash credit, bill discounting, bank loan, trade credit. Trade credit means basically taking credit from your own suppliers for buying raw materials. Everyone clear? So what all are there? Equity, preference, borrowing. These are debentures. These are long term. Short term, public deposits. I'm sorry, not short term, short and medium term. And purely short term, all these different items are there. Now, some norms need to be followed. For a public sector company, 1:1, private sector company, 2:1, debt equity ratio. Anything beyond this, can I say, will cause significant amount of risk. Ideal ratio varies from industry to industry. Now, what is this? For capital intensive industries like L&T or something like that, where they're manufacturing capital intensive, high cost projects, or for projects in underdeveloped regions, debt equity could be higher. Why? Because then they would require more money to build what they are building. Simple. Real estate, infrastructure, etc. Okay. In investment decision, can I say you have to basically talk about investing in fixed assets, investing in current assets. Can I say investing in current assets was estimation of working capital, cash budget, receivables management, all that is here. And this is purely capital budgeting, which machine to buy, which project to go for, etc. Now in investment decision, various examples they have given. Addition of a new product only. Chips company is there, it is going into biscuit. So can I say addition of new product is an investment decision. Increase level of operation of existing product. So can you see two things? First is go for new product only. Second is continue the existing product but increase the capacity. Increase capacity of existing plant or set up a new plant. Okay, do you understand this? And this is also an investment decision to reduce costs. Capital budgeting taught you that there are some projects whose only benefit is savings in outflow. You remember this? There are two types of inflows a project enjoys. One is the actual cash inflows. Second is savings in outflows. You know, there were these questions where a company goes for a machine which will replace some of your labor. So the machine will not generate sales, but it will help you reduce costs. That also, can I say, is an investing decision. An investing decision also includes monitoring of different activities once you have taken the decision. Okay. Next, at the end, ICEA has summarized everything. It is basically project evaluation and selection, which we studied in capital budgeting. Done. Dividend decision. What is dividend decision? How much to distribute versus how much to retain. You understand this? How much to distribute versus how much to retain for future expansion. See, listen. More you listen, more you will be able to write. In exam, anyways, you're going to write out of your mind only when theory questions come. But more you stuff in words, lines, concepts, paragraphs, PDFs, notes, past questions, more something will come in your mind to write. Otherwise, you'll be stuck. What to write? You understand what I'm telling you? You have all gone through it. Theory questions in practicals of papers. You know it becomes slightly challenging. If it goes in option, best. But sometimes it doesn't, because in FM, no, every question, I don't know whether you know about it or not, in every question, they will ask 8 marks, 4 marks. You understood what I'm saying? That group of 8 plus 8 plus 4, that is like one big question number 2, A, 2B, 2C. Then there will be 3A, 3B, 3C. But between the 2 and 3, you will have option to choose anyone. Or 5 out of 6 or whatever. But once you choose, can I say 4 marks compulsory, you have to write. Which means theory questions come maximum for 4 marks. 8 marks question I showed you, that was a practical question from this chapter only. November 20 it came. Suddenly nobody knew about it. November 20 paper question I have got today. That also I will solve for you. If it comes now, I'm telling you, there will be hardly anyone who knows about it. You should be eager to study all this. Once you have learnt, then it is simple. But if you have not learnt, you will go crazy in the exam. What to do, like that will happen. Nobody knows there is a practical question asked from a theory chapter in November 20 paper. And I have got that question today only, we'll solve along with it. Okay, that is connected with point number 6. We are in point number 5 now. Point number 6, last point now. On that they made practical question input. Okay. When I did further research, I came to know that that question was asked in May 2001 paper last time. So, from where they are pulling out questions. May 2001, and May 2001 this chapter was not there also. So one weird question was there in May 2001. On that they have created one theory, put it in this chapter, and then they re-asked that question. So let's be ready with it, okay? All right. So dividend decision. Dividend decision is how much to distribute versus how much to retain, correct? Then ICAI is saying that when you are taking a dividend decision, please know that stability of dividends can have positive impact on share price. This is true, which means a company which has a clear dividend policy, not that sometimes I feel I'll give, some feel I will not give. No. Every year this will come to you. That stability is there, people are more inclined. For example, I will give you a very simple example. Sometimes when a particular chapter is, let's say forex, everyone is done. Now when forex is done, you might have noticed whenever bid rate ask rate came, whenever in the initial part of the chapter, I again and again made you all right, we want to buy dollar, bank will therefore sell dollar, bank will sell dollar at the ask rate of dollar. Oh, we want to sell dollar, bank will therefore buy dollar, bank will buy dollar at the bid rate of dollar. Again and again for the first half of the chapter we all wrote, stability was there. Then can I say you became more inclined towards it, and now I know this. Now at the end I think you knew bid rate ask rate came very naturally to you. But if there is no stability in explanation, every time different if I give explanation, you will not feel inclined towards it. Same happens with shareholders also. If a company is not stable in giving dividends, then they might not choose to stay in that company. Everyone, they will say, we'll go to somewhere else. That is what ICAI is saying. Stability of dividends now will give positive impact on share prices. But the question is, what does stability in dividend mean? Every year, 2 rupees per dividend, 3 rupees per dividend, like that. So ICAI is saying stability could mean different things. So now one example they have given is this. Fixed percentage of earnings is also one stable kind of giving dividends, and according to institute, according to me also, this is the perfect way of creating stability but at the same time having flexibility. Because if I say whatever earnings are there, not 10% I will give every year. Now if earnings are high, I'll give more. If earnings are less, I'll give less. Everyone, are you able to understand? That is the best. So ICAI is saying it is best from flexibility and ability for company. Some companies do this. Pay fixed minimum dividend plus additional dividend when earnings are high. This is another strategy. But then little bit more decision making gets involved here. Here can I say passive? This is passive decision making. Fix a rate, keep giving every year. Okay. This is a very nice line. Please read this. They have written one full paragraph on it. I have put it this versus this. You will understand. Okay. What do I mean by this? If you are a finance manager and you want to take a dividend decision, what parameters you have to check? First, do you have any investment opportunities? Said no. Theory, if you remember, if investment opportunity is there, go for it. And if you want to give dividend, give, but don't lose the investment opportunity. Raise money through equity shares, whether dividend is raised or dividend is paid or dividend is not paid. You remember all that? Little bit you might remember. Anyway, so investment, if sometimes students just ask me, CA, sir, what if investment opportunities are not there for the company? Then can I say that the entire chapter becomes void of issue? Because if the company doesn't have investment opportunities, then why you are thinking whether to give dividends or whether to retain? What will you do with money? You don't have opportunity only. So companies will always have opportunities for investment. Everyone clear? So that has to be checked versus dividend preferences of shareholders above capital gains. Now what does this mean? Please understand, there is 100 rupees cash which belongs to shareholders. I have two options: either give it to you or retain and reinvest. If I retain and reinvest, can I say your share price will go up? That will give you capital gain. Are you preferring that, or are you preferring cash right now? That preference also has to be checked, is what ICAI is saying. Everyone clear? If they have dividend preferences, then give dividend. If they have capital gain preferences, then retain and reinvest. Everybody clear? Now these three decisions we studied. Which three? One is financing capital structure, one is investment, and one is dividend. So students, if at all these people ask you interface between financial policy and strategic management, if you don't remember anything, it's okay. Just write down these 3 points which you have studied in inter-CA: financing, investing, dividend, and then write whatever you know about it. Everyone clear? Then some additional points. I think this is self-explanatory. Read it, please. We discussed already this in earlier. Everything has to be in sync. Okay. Now, very important line. I will just in brief explain, then you read it from here. Your company market value depends on demand supply. Demand will come only when shareholders feel good about your company. How will they know whether your company is good or bad? By looking at your accounts. Hello, accounts is the only thing now. How accounts is the language of the company. Financial reporting. How are you report? Whom are you reporting to? One of the people you're reporting to is the investor community, present as well as future. Do you therefore realize that those accounts become so important for eventually deciding the market value of the company? Because accounts will influence the desires of the investors. Desires of investors will influence the demand of the investors. Demand will influence the market value. Therefore, these people are saying that financial policies influence external awareness of the company to investors in respect of its performance. Current and future stakeholders actively evaluate the companies to decide the preference of investing. Therefore, attention to financial policies must be drawn at the stage of corporate planning itself and not later. So they are saying, Baba, you give this importance because your eventual market value in itself is dependent on how you create your financial policies. Everyone clear till here? Okay. And then they have said one filmy line. What is this? Interdependence. Whose interdependence are you talking about? Like how state government and central government are interdependent. Like that, they are saying strategic management and financial policy are interdependent. That is the name of the chapter. Chapter's name is that only, na? Financial policy and corporate strategy. They are saying they are interdependent. All this we were discussing for that only. But then they have said one line. Sometimes the corporate strategy, the cause, and financial policy becomes the dependent, which means becomes the effect. Sometimes financial policy becomes the cause and the corporate strategy bends accordingly. Everyone clear? So that's one line that they have said. Okay. So students, with that we finished the second last point. Now comes the last point. Students, in this, just 1 minute. In this 6 point, okay. So do one thing, read only this paragraph till here. Don't read sustainable growth now, okay? Growth rate, just read till here. Sustainable growth rate will come, no? On that question is there, okay? Ready? Okay. So last point is telling CAs that when you handle the finance of a company, make sure that the growth rate of your sales is neither too low, which of course everyone understands, but neither too high also. Because if you are focused on too high sales growth, it is possible you might end up taking some wrong decisions. Everyone clear? That is why they have used the word sustainable growth. Now, like for example, even in personal finance, anyone tells na I will give you a return more than like 18-20% per annum. I always tell students run away as far as possible, because generally for fast growth in returns, there 100% will be a risk of gambling. You're understanding? There 100% will be a risk. There will be a risk. Sustainable growth means what? Okay, I'm happy with Nifty. Nifty is giving 12% per annum. Let it grow in that fashion, no problem. But too low means I'll invest all my money in recurring deposit. 5-6% I'll get. That is too low. Gambling and all will give you 20, 25, 30%, sometimes 100% in 1 year also. That is too high. Your car will crash. You're understanding? No? Sustainable. Now they are saying it forces chartered accountants to consider consequences of sales increase. Set the sales growth goals that are consistent with operating and financial policies of the firm. Else arises conflict if growth objectives are not consistent with the value of sustainable growth. They gave an oil example somewhere. See, this is a very nice example. You know that ONGC and all, they are selling oil, but they themselves came out with Save Oil campaign. Now, do you realize this is counter strategy to sales growth objective? Because if your entire goal is to sell oil, how can you come and tell people to save oil? You should tell them to consume oil more, no? But then what is this? What is ICI saying? That your growth objectives might be to grow the sales, but they are not consistent with shareholders' growth, because shareholders want to stay for a long time. If you go on non-stop now and finish off the oil on the planet, then can I say future shareholders will have nothing to earn? Everyone clear? No? That is called a sustainability. Right distribution of resources becomes a difficult question when we have to consider not only the rightness or the correctness for current shareholders, but also for future. For current shareholders, that massive sales growth could be good. But for future shareholders, can I say they will not have anything to sell only? Everyone clear till here? Okay. Sustainable growth is important for long-term development. As I told you, too fast or too slow growth rate is dangerous. Financial policy should play a key role in making sure growth rate is sustainable. Now, this point I directly took from ICAI, because they have also nicely put it in bullet points only. So if I would have written, I would have written the same thing. This is a question that can come in the exam. Huh? Listen carefully. What makes an organization financially sustainable? Did you read all these points? Having more than one source of income. Actually, no. When I read it, no, I read it as what makes a family financially sustainable. You can read it from a family's perspective also. Have more than one source of income. Have more than one way of generating income. Do strategic action and financial planning regularly. Have adequate financial systems. You know what financial systems are? That we will not do random spending in home. We will not order food more than once a month from outside. We will eat at home. These are financial systems for a family. Financial systems for a company also are there. Have a good public image. Be clear about our values. Have financial autonomy means basically don't depend on others. Everyone clear? Okay. Uh, okay. So I am a teacher, na? I should earn not only from teaching, I should also earn from financial consultancy. this becomes having two sources of income. Now in teaching, no, I earn not only by coming physically face to face to classroom, but in teaching, I also earn by selling my recorded lectures in the country. Now you see, I have more than one way of generating income from the same source. And I have two sources of income also. I'm not telling this in reality, I'm just giving example. Everyone clear? Okay. Can I go ahead? All right. Chalo. Last point, students, 6.1. Now this no, uh, this 6.1, that is sustainable growth rate, just go through it quickly, then I will teach you a sum which came on this. After the sum is done, then I will teach you the theory again. Everyone clear? So through the sum we will understand it. Please read, everyone. By the way, you might be remembering this from inter C. Okay, when you read, now you will understand. G is equal to B into R, that formula. क्या क्या ठंडी लग रहा है कि गर्म हो रहा है? Chalo, please read on. Don't get distracted. Please. One full chapter we are finishing today. Everyone. भव्या रुक जा. Important. 5 minutes. Done? Everyone read it? Or you have skipped it? Please don't do that. See, if you show insincerity, no, I will lose. And see, I'll tell you, I'm not supposed to do all this. You understand, no? If you show insincerity, I skip the remaining 4 chapters. Huh? Really, I'm saying. I will not do it. Please come to class only if you are interested to clear your exams. If you have any other objectives, better don't come like many of your friends. Don't sit here and show insincerity. Almost every paper 4 marks question has come from this. And 4 means it could go into your compulsory question. Why you want to attempt 96 marks only? No. MCQs, they will not ask this. That is case studies. But you never know. Anything can happen. But as of now. Please don't let the entire effort of coming to class go waste by doing time pass here. Please study. Remember those intermediate days when you used to continuously ask how to study theory, from where to study theory. Now I'm doing it. This is it. Practical, almost everything is over. Only little 2.5 chapters are left. Small. Zoom people, please check your chat box. All done? Read it? I'll go ahead. Sustainable growth rate. Now, a lot of ratios and all they are mentioning, but we'll understand only once you go through a particular sum. Now, before that, students, this is what it all boils down to. Check question 1. This came so many times. Mock test paper October 19, April 21, past year paper November 19, January 21, RTP November 20, MTP March 23. Discuss briefly the key decisions falling within the scope of financial strategy. You know it, financing, investing, dividend portfolio. You have to buy it once at home, that buying thing you do, but you understand what to write now, 4 marks, 4 points. Okay. Then sustainable growth is important to enterprise long-term development. Just now what we were discussing, that sustainable growth thing is there. Explain the specific steps that make an organization sustainable. Students, that same thing, same answer about sustainable growth, and all those different points were there, no? More than one source of income, this, that, etc. All that you can write down there. Also, what you read just now, that is the only thing which is there here in that sustainable growth rate thing. Balancing financial goals versus sustainable growth, again the same thing. You can see sustainable growth, I told you, a lot of questions are coming from this point. Okay, here though I think they have completely copy pasted the whole answer only. The whole point number 6 they have copy pasted. Financial resources, financial tools and financial goals are outcomes of financial planning. Do you agree with this? Just write down whatever you understand from it. Explain what makes an organization financially sustainable. Remember this. Explain the outcomes of financial planning. So outcomes of financial plannings are financial objectives, financial decision making, financial measures, ratio analysis. It helps you identify for future. All that things only you have to write down and keep. Okay. Next. This also, financial decision making helps in analyzing the problems that are being faced by the company and accordingly deciding the course of action to be taken. Students, this one line you should remember and write the full paragraph around this line. We have already discussed this in the past. Explain the term corporate level strategy and what are the 3 basic questions it answers. You remember that? Suitability, feasibility, acceptability. Again, what makes an organization sustainable? Same thing. State the strategy at different hierarchy levels. Corporate level, business and functional. Okay. You want to read this once? This is for this question, where we have done corporate level, business level and functional level there. हिंदी में स्टूडेंट्स ने ठोका है. Explanation points were generic in nature. They are talking entire India only has done that. I'm telling you, all this nobody touches because SFM practical only is so huge. AFM, theory and all students have to manage on their own. You're understanding? And therefore nobody gives a damn to this. You will write something. You study and take 4 marks. Specific answers you write in past exam question compilation I've given. Check it out. Okay. Alright, this question I will do. What makes an organization sustainable part you know. The question part I will explain in some time. Okay. Interface of financial policy and strategic management. This is your point number 5, the entire point number 5 which I taught to you about. Okay. In point number 5, if you remember those 3 points, investing decision, you write everything. Financing decision, dividend decision. That 3 things are there. In this theoretical question, performance was above average level. Okay. Alright. In the current scenario, what are the responsibilities of CFO that have drastically expanded? This was the first point. Remember, supply, risk management, supply chain, mergers, ESG. And then comes this question. I told you, November 20. Now, everyone thinks that this question is from equity valuation. But it is not from equity valuation. Security valuation chapter was there, no? It was not from that. It is from this chapter. So can I teach it to you, please? I will now, what I will do is, this is ICAI solution. But I will now write down my solution in my own handwriting down here. And then I'll give you the PDF. Everyone, so that you have my notes also. And then you will understand how Institute has made one blunder in the solution. Okay. All right. So students, this is the question. Everyone please read. I will give you the PDF of this to everyone. So right now just read the question. Just read for proposal 1, then I'll explain. Done? Okay, so all the best. Finally, practical question. Water in. Can we start? Okay. AB Industries has equity capital of 12 lakh, debt of 8 lakhs, and sales of 30 lakhs. Two mutually exclusive proposals are under consideration for the next year. The details of the proposal are as under. Everyone following now? Everyone there with me? Proposal number 1. They are saying assets to sales ratio should be this much, net profit margin should be this much, debt equity ratio should be this much, and retention ratio should be 75%. You are required to calculate sustainable growth rate for both the proposals. And I think sustainable growth rate is what you were studying on your own last point of that particular chapter. To this question, I'll explain the whole thing to you. Everyone ready, please? So question number 14, what I will do is here only I'll write solution. Okay. So question 14. And we will pray that this comes in the exam, so that you are at least 8 marks ahead of others. Otherwise, what is the point? Na? Ready? Alright. Question number 14. In that I will write, you don't write any of this. I'm giving you this very PDF I'm giving. Okay. Proposal 1. Now, in proposal 1, I have two methods of solving this question. Understand both. Actually, I have three, but the third one I will not show because latest ICAI solution doesn't have that. There was one big formula that was there in the May 2001 paper. In that suggested answer, no, they had given one very horrible looking formula. They have removed it. Answer comes same only, but they have removed it now. So proposal 1, and I will write here method 1. Okay. What are they asking? They are asking growth rate. Everyone there, they are asking growth rate. Now, do one thing. Now, I'll do one thing. Can I give you this question on your mobile phone first, so that you have the question with you? Wait, I'll just share. कमल डाल देना ग्रुप में, भेजता हूँ जरा. भेज दिया. Everyone got the question? Okay, so you keep it there now with you. Okay. Now, method 1. Students, last line read question. What are they asking you? Sustainable growth rate. Now come here. Have you studied in Inter-CA that G is equal to B into R? Everyone knows this. G is equal to B into R. Agreeing? Okay. Now, as far as B is concerned, check the question they have given in the question. What is B, by the way? B, you remember, na? Retention ratio. What is B? 75%. Everyone clear? B is 75. This is clear. Now comes R. Now R, that is ROE, that is return on equity. The formula was net profit for equity shareholders divided by equity shareholders funds into 100. Everyone there? Now there came a concept in ratio analysis called as DuPont chart. Okay, DuPont chart. You know what this DuPont chart does? It breaks up the ROE into 3 points. Okay, 1, 2, and 3. What 3 points it breaks it up into? I'll tell you. One, it calls it as profitability. One, it calls it as asset turnover, and one, it calls it as equity multiplier. In interest, you must have heard this name, equity multiplier. It was also called as financial leverage. Anyways, ready? Now, profitability, no? Formula is net profit upon sales. Now, do you understand? If sales is 100 and net profit is 8, profitability, can I say, is 8%. Everyone clear till here? Asset turnover. Anyone remembers the formula of asset turnover? Sales divided by total assets. And equity multiplier will be, no, total assets divided by equity shareholders funds. Now the magic of this is, try multiplying the 3, this into this. Sales cancel, total assets cancelled. Can I say what is left with is ROE? Understood the bifurcation of ROE into 3 points? Great. Now check your question. Do you have profitability percentage with you? Please check. 4. Okay, so this is 4. So I'll write it as 0.04. Everyone agreeing? 4%. Okay. Now asset turnover is given 0.65. No, but I hope you are smart enough to understand it will be 1 upon 0.65, because I think the ratio given to you is assets to sales, if I'm not wrong. But what I need here is sales to assets. You're paying attention, no, everybody? Okay. And then comes equity multiplier. Now please pay attention. I'll put a star here and I want to teach you something. Please pay attention. Now, what is the debt equity ratio? 2:3. Proposal 1, please. 2:3. Students, can I put it like this? That if equity is 3, debt is 2, assets will be 5. Come on, everybody. If sure na? Okay. If you have understood this, can I write equity multiplier ratio as 5 divided by 3? Check please what I am doing. 5 divided by 3 considering the debt equity ratio of 2:3. Nahi samjha? Okay, so I'll write here assets will be 5. Now in reality, if debt is, let's say, 20 lakh, just giving example, equity will be 30 lakh. Can I say assets will be 50 lakh? Doesn't matter, na? The ratio will always remain 5/3. Everyone clear? Okay. So now you have understood all these 3. Now let's multiply. Everyone please, let's multiply and give me the ROE please. How much? So this is 0.1026. Can I say that is 10.26%? Everybody there with me? 10.26%. Can I say now I will be able to find G? G is equal to B into R. 75% into 10.26%. On the calci, take 75, multiply by 10.26%. Tell me how much do you get? Okay, 7.695. We'll do it as 7.7%. Everybody clear? This is the answer to proposal 1. You will be able to do it in the exam properly. Okay. Now, unfortunately, ICAI's answer in proposal 1 has come to growth rate has come to 2.77%. Now this is a major gap. You understanding? We have got 7.7 and they have got 2.7. I'll tell you where they went wrong. By mistake, no? I'll take this. Just 1 minute. ICAI by mistake took 3 by 5, that is 0.6. That mistake they did, I'll show it to you. See, you can see equity multiplier 0.6. Huh? What are you saying? No, that is right. 12 lakh, see, equities that they had given here only, no, 12 lakh and 8 lakh. So assets were 20 lakh. I hope everybody is understanding. Equity multiplier should have been 20 lakh divided, 20 lakh divided by 12 lakhs. Everyone clear? They by mistake did 12 divided by 20. And that is where they went wrong. By the way, so here there is a little bit of a printing error. This is equity divided by equity plus debt. That is 12 lakh divided by 20, and that is how they got 0.6, but that is also wrong only. Everyone clear? Right? It is incorrect. The printing error happened, but anyway, forget it. Everyone clear? Alright. Printing error is this, here, the formatting. But the answer itself of ICAI is wrong, which is why we are getting different. So I was thinking, am I sure that I have done the right thing? Because I don't want to tell you something wrong. Institute has done 0.6 and I am taking reverse. So what I did is I came out with one more solution for proposal 1 only, which will give you complete clarity about what exactly has happened. Just give me 5 minutes. Everyone ready? Can I just explain that? So I am now going to write method 2. Okay, method 2. Are we ready, everybody? Has the question given to you sales, please? Or assets? What is the question given to you? Sales diya na? Sales na over 30 lakhs. Can you see sales are 30 lakhs? Okay, great. So now see this. Sales are 30 lakhs. Everyone agreeing? Sales are 30 lakhs. What is the asset to sales ratio? Question you have na, assets to sales is, can I say 0.65? Forget the ratios, just go natural calculation. Asset to sales is 0.65. Can I therefore say that the assets must be, help na with the numbers? Okay. I'll do one more thing. Wait. So assets divided by 30 lakhs is equal to 0.65. Therefore, assets are equal to 19,50,000. Everyone agreeing? Okay. Students, what is the debt equity ratio, please? 2:3. Everyone there? 2:3. Can I therefore say that equity will be 19,50,000 into 3 by 5 and debt will be, you're following, no, everyone? 19,50,000 into 2 by 5. Help me with the numbers. 11,70,000. 7,80,000. Everyone there with me till here? Great. Students, equity and debt set. Next ratio. What is net profit ratio, please? Net profit ratio is 4%. Can someone intelligently tell me this 4% is to be applied on which number? Sales. So therefore, net profit will be 4% of 30 lakhs, which is equal to, please, how much? 1,20,000. Are you there with me till here? 1,20,000. Where will this net profit go? Where will it go from here? Balance sheet. It will add on to equity. 1 point difference. First check dividend and retention ratio and then bring it to balance sheet. Everyone there? So right now you also have a retention ratio. How much is the retention ratio? 75%. Can I say therefore retained earnings. Okay, retained earnings will be 75% of 1,20,000. How much? 90, which is equal to 90,000. Story clear till here? This will, can I say, add on to equity? Very good. Now students, what I'm doing now is what you have read in that sustainable growth rate model. Listen carefully. This will add on to equity. Can I say, therefore, revised equity, okay, will be 11,70,000 which you got earlier plus 90,000, correct? This will come to how much? 12,60,000, correct? What is this concept saying? All ratios have to be kept constant. I think you'll have read, I don't know whether you read somewhere or not, all these ratios they're saying have to maintain. To maintain debt equity ratio now, can I say if equity has raised slightly, simultaneously debt also has to raise. Everybody there with me? So can I say to maintain debt equity ratio of 2 is to 3, to maintain debt equity ratio of 2 is to 3, revised debt will be, now look at me, debt is 2, equity is 3, equity is 12,60,000. So can I say it will be 12,60,000 into 2 by 3, and that comes to 8,40,000. I am writing a little bit here. Therefore, additional, this is not required, but just writing, additional borrowing will be, your original debt was 7,80,000. No, see up, 7,80,000. Now it has become 8,40,000. So 840 minus 780, which is equal to 60,000. Correct na? 2 is to 3 ratio na? 90,000 equity is increasing, 60,000 debt is increasing. Correct? Students, do you realize you have revised equity? You have revised debt. Can I say therefore revised assets? Understood what I'm doing? Earlier your assets I think were 19,50,000, but now do you realize it will be the equity plus debt, and that comes to 21 lakh. Everyone there? That comes to 21 lakh. Hello? Now you got the 21 lakh as the revised asset. Any idea what can I now find for the company? Revised sales based on the 0.65 ratio. Hello, everyone there? So they are saying assets to sales will be 0.65. 21 lakh to sales will be 0.65. Therefore, sales will be 32 lakh 30,000 769. 769. 32 lakh 30,000 769. Everyone there? Students, can I say therefore growth in sales will be 32 30 769 minus original sale was 30 lakhs divided by 30 lakh into 100, 7.69%, which I had got using this ratios. I am back at doing what I know best. Hello? Understood the number game? Clear? Huh? And now can I say I can clearly write this now? It is a mistake now. I have proved it through other route also that 3 by 5 is wrong. It has to be 5 by 3. Everyone clear? 7.69, which I will just write. Can I write 7.7 here just? Okay. Okay, 7.7. Same as earlier. Done. Now we will go to proposal 2. Proposal 2 is tricky. See, read nicely. proposal 2. Now, क्या करने के लिए? आरओबी ढूंढने? आरओबी ढूंढना ही नहीं था. बी इंटू आर करने के लिए. बी इंटू आर करने के लिए फर्स्ट मेथड था. सेकंड मेथड मैंने बी इंटू आर किया ही नहीं है. सेल्स माइनस सेल्स किया ना. ओके. Everyone ready? Can we start please? Okay. Students, in proposal 2, I am now showing method 1. Please pay attention. Now method 1, no, however, will look like earlier proposals method 2 because I need to go through that first. Everyone ready? Please pay attention. What is the equity in the company right now? 12 lakhs. No? 12 lakh. What is debt? Debt is 8 lakhs. Till your story clear? Now what are they saying? They want to increase debt. Something they said now want to increase equity. What are they doing? Increase the equity by how much? 1 lakh. Increase equity by 1 lakh. Everyone pay attention, no? Increase, hello, equity by 1 lakh. So revised equity will be, Acha, look at me. What is my final goal? My final goal is to calculate percentage increase in sales. That is the growth rate in sales. Now the whole theory was on that only. Sustainable growth, sustainable, that only is going on. Correct? Now, revised equity, do you realize, will be 12 lakh plus 1 lakh, which is equal to 13 lakh. Do you agree? Now students, I want you to finally start thinking, how do I take this whole discussion towards getting my sales? Understood the question? How do I get the revised sales now? Take your time. I got revised. Tell me what to do next. Debt equity ratio I will take. Okay, so now here the debt equity ratio is massive. 4:1. Check please. If the debt equity ratio is 4:1, can I say therefore revised debt will be 13 lakh into 4 by 1, which is equal to 52 lakh. And just for students' benefit, I will write therefore additional borrowing will be 52 lakhs minus 8 lakhs, which is equal to how much? 44 lakhs. Everyone clear? Can I go ahead please? Okay. Now, so we have revised debt, we have revised equity. Can someone tell me what next to do? Assets. Very good. Therefore, revised assets will be 13 lakhs plus 52 lakhs, which is equal to 65 lakhs. Got this? And then what to do? Assets to sales will be 0.65. 60. Oh yes, now it is very good. Next, in the proposal 2 it is 0.62. So can I say 65 lakhs divided by sales is 0.62. Therefore sales turns out to be 1 crore 4 lakh 83,871. You got this? 1 crore 4 lakh 83,871. Done? No, don't compare it with 30 lakhs. Wait. Because that 30 lakh and all, do you realize, was in the year when 2:3 debt equity is there and all that is there. Now can I say this is the base year sales now? Now with this I'll go one more year forward and then compare these two sales. Everyone, are you able to understand? Because now debt, retention ratio, everything has to be taken into consideration. Everyone there? Okay, so you got sales. Now look at me. So what was 30 lakhs for you in the last question, no? Has become 1 crore 4 lakh 83,871 in this question. Everyone there? Hello? Sure? Okay. So from here, I want new sales of next year. Everybody clear? I want new sales of next year. How do I proceed? Tell me. I'll first find net profit. I'll then find retained earnings. I will take retained earnings and add to equity. I will revise debt equity. I'll revise the assets. I'll get the new sales and I'll calculate the rate. I hope everybody is understanding. Sure, na? Chalo, let's start. So here comes net profit. Net profit ratio is how much? 5%. So 5% of sales, which is 5% of 1 crore 4 lakh. Students, just give me 1 minute. Just 1 minute. Anyways, how much is this? 1 crore 4 lakh? 83,871, and that comes to 524,194. Please participate, everybody. 524,194. Can someone tell me what to do next? Net profit, you got net profit. What next? Retained earnings. But this time, retained earnings is not given in the form of a ratio. It has been given in the form of dividend amount. So look at me. Did you now understand why I did not take that ROE route? Because there I wouldn't have got only that B without having these numbers. Everyone clear now? Because the ratio was not given. So dividend. Now dividend is how much? 30,000. So therefore retained earnings will be 524,194 minus 30,000. 494,194. Where will this retained earnings stick on to? Equity. So therefore revised equity, okay, revised equity will be, okay, what was your original equity? 13 lakhs. Can you see this please? 13 lakhs. In that how much to add? 4 lakh 94. So this will be 13 lakhs plus 4 lakh 94 194, and that comes to kitna? Just 1 minute. कितना है 17, sorry, I got distracted. 1794 194. You got this? 1794 194. Then can I say we have a debt? So I'll write here, to maintain, how much is the ratio? 4:1. To maintain debt equity ratio of 4:1, revised borrowings will become massive. 1794 194 into 4 by 1, 71 76 776. Correct? So I'll write here, therefore additional borrowing will be 71 76 776 minus 52 lakhs, which is equal to 1976 776. 1976 776, which I am pretty sure is 4 times of this number. What equity is increasing by, debt is increasing 4 times by it. Okay, all right. So we have got additional borrowing. Hey, can I say that will give you revised assets? Revised assets will be revised equity 1794 194 plus 71 76 776 89 970. Last point, revised sales. So we have assets to sales ratio of 0.62. So we have 89, just 1 minute, we have 89 70 970 divided by sales, and that should come to 0.62. Therefore you get sales as 1,44,69,306. Last point. Therefore, G is equal to 144,69,306 minus. What are the original sales? 104,83,871. 104,83,871 divided by 104,83,871 into 100, 38.02%. Everybody clear? 38.02%. Now, this what I taught you, can I say is two numbers or amounts, not through ratios. Everyone clear? Give me a chance to explain using that chart. Now that we have these numbers, now I can explain it through that DuPont chart. Everyone there? So what I will do is, I will take this thing, copy. Okay. Let's rectify these numbers here only. Okay. So I am now doing method 2. Students, let's start one by one. Method 2. G is equal to B into R. Now first of all, for B, I have to take numbers from here only. Please come here. B, do you realize is retention ratio? Look at the screen, please. Can I say retention ratio will be this number divided by this number? Please check. Did you all understand what I did? 494, 194 divided by, so I'll do one thing. I'll just take this. So retention ratio will be 524 194 minus 30,000 divided by 524 194 into 100. Give me this number. 94.27%. Got this? So we got retention ratio. Now can I say for it was actually for this only that I was not able to do method 1 directly, because I didn't have these numbers. Na? Hello. Method 1 means this method basically. Now that I have the numbers, I can do it. So we have 94.27 as the B. Students, help me now with these numbers. What is profitability percentage? 5. Asset turnover is 1 upon 0.62. And debt equity ratio, do you realize now is 4:1, where the debt is 4 and equity is 1. Can I say the multiplier will become 5 by 1? Hello, everyone there? 5 by 1. Samajh rahe pakka? 5 by 1. I'll check what ICA has done. And please give me this number, 0.4032. That becomes 40.32%. Everybody clear? 40.32%. Now our B is 94.27%. So this is 94. कितना था? 94.27 ना? 94.27% into 40.32%, and that should come to, do it no properly, 94.27% into this comes to 38.02, that is 1%. Same answer we got using everything else. Last answer now, proposal 2, institute has got growth rate 1.52%. They have messed it up. They did equity multiplier only wrong, na? They did equity multiplier only wrong. Now can I say the more the debt equity ratio, the more you are taking inverse, the more you are going away from the answer. You are understanding? So I'll just tell you one thing. Do one thing. See, take your calculator. Take your calculator. No, everybody. See, retention ratio, they got 94.3%. We have also got that only 94.27. This is right. They have messed up in ROE. In ROE, no. See, okay, I'll just take this one point here. just to tell you where they have done differently. Okay, I'll paste it here. Look at this, everyone, please. 5.242 upon 65, that ratio. Uh, 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 what are they doing? Hold on. ROE 0.2. Anyways, just 1 minute. Retention ratio 0.943, that is okay. एक minute. No, that is okay. Just 1 minute. Total assets. Okay, do one thing, everyone. 1.6. Here, instead of 0.2, take 5 because we have taken reciprocal. Na? They have taken some shortcut calculation. Do it now. 5.242 divided by 65 into 5 into 100. How much are you getting? 40.32 you are getting. So we have also got the same ROE, na? 40.32. Hello, are you there? We have got the same ROE. The only difference is that instead of taking 5 by 1, they have taken 1 by 5. Everyone there? They have done their mathematics. I'm not going to those numbers. It is the same thing. Please trust me on that. We are taking the same numbers. It's just that for them, they have done one error here. That one error, can I say, if you rectify our answer and their answer completely matches. Now our retention ratio is anyway same only. ROE also would have become same. So I'll just write that note here. This note I will copy and I'll just paste it here. But it is already there. ICAI by mistake took it as 1 by 5, that is 0.2. That one changes, otherwise everything else is same. But we will do the right thing because it is quite obvious that it was an error. It was a complete error. And I have proved it using logical method also without going to the ratios of DuPont. Alright, so I hope you all got some value addition in your life by going through chapter 1. Skip? Why to skip now all this? If you can get straight away marks like that. Okay. So I'll just, when you go home now, I'll share it with Kamal. You put it on the group. This PDF I'll share it with you. All done? Okay. So with that, students, we complete the discussion to which chapter? Financial policy and corporate strategy. Now we have to go back to practical chapters. Advanced capital budgeting was going on. Correct, no? So before we go ahead, can you please tell me in advanced capital budgeting, where have we reached? I'll also see if I have my notes that I did in your batch. If I have, it will be great. But in advanced capital budgeting, now I had written the solutions only and kept, which is why I'm not very sure. वही था. वो किधर लिख के रखा था ना, वो मालूम नहीं मेरे को. Project IRR, equity IRR is done. Just check. Question number 41. Is it done? हाँ. Okay. Module नहीं, just tell me again. ये हो गया था ना? Okay. So 44 was done. Just 1 minute. Valuation of vacant land also done. होता ना, valuation of vacant land, that is done. Just someone confirm 43 is done. 43 is pending. 40. So according to me, 43 12 and 36. Only these three are pending. You please confirm. 43, 12 and 36. 12, 36, 43. Students, have you identified something? Still checking? Checking videos? अरे बाप रे. हाँ. I know, but then now in your batch I had changed my sequence. Now I don't have it. We had some last questions left now. Hold on, let me see. I think it was in the study module that I had written something. Ah, I know that valuation of vacant land. Ah, got it. ओए मिल गया. RADR 3 questions, certainty equivalent 2 questions, replacement 2 questions, and miscellaneous 1 question. Are we ready? Okay. 11. Just give me 1 minute. There is some confusion. I might have to leave you now only. There is some logistic issue. Just wait. I'll confirm in some time. Students, we will have to pack today. We will start new chapter, remaining chapter next lecture. We will finish it off. And then listen, be ready. Huh? After advanced capital budgeting, 4 or 5 questions are done. I am picking up next theory chapter called as risk management. In risk management, also there is one practical question, value at risk, VAR, which is there in other foreign courses also. They ask questions on that. There is guarantee you will not understand anything if you directly read the notes. It is that crazy. Okay, so be ready. Thank you. Next lecture, however, entire lecture will go in advanced capital budgeting only. After that, I think Thursday we will do risk management. Okay, thank you. 4. वो मैं मिक्स करके करेगा, डोंट वरी.